Siddharth Sanyal, you first. What is your big takeaway? Is this a sign that the worst is over, that we are truly emerging with every quarter out of the pandemic blues, the Ukraine blues? This is April to June, 13.5%, well ahead of most other large economies. Is this a positive?
That's a very pertinent question, Rajdeep. And if you just on an absolute scale, if you ask whether the worst is over, the answer is possibly yes, because the kind of numbers we have seen over the course of the last few quarters will possibly not be seen going ahead. But having said that, will the numbers be very significantly higher compared to what we had been seeing in the pre-COVID time? The answer may not be that positive. So basically, if I keep aside today's number of this 13.5%, which is a very, very statistical phenomena, in fact, but if I keep that aside, going ahead, the numbers will possibly be more in the 5% vicinity, taking the overall full year's growth number just shy of 7%. So this particular year, overall number, you might get to see somewhere in the high 6%, close to 7%. But the reality is that the next few quarters will be more in the 5% vicinity than anything else. Now, there are a few factors that one must keep in mind, that while our today's number is significantly higher than most large economies today, one very important factor is that India faced the second wave of COVID absolutely in this particular quarter of the previous year.
Right.
So basically, India's dent in GDP growth for that particular quarter was contained in that particular quarter, and that's why the statistical effect is so much more positive, which will not be there with us going ahead in the next.
So what you are saying is April to June quarter of 22-23 in a way benefits from the fact that in 21-22 this was the quarter where we had the second wave of COVID. So we moved from a low base, which might explain the double-digit growth in this quarter. Yes. The bigger concern growing ahead is whether we can sustain this over the next 9 months. You're looking at 22-23 to be just under 7%. Am I correct?
That's absolutely correct.
But that still puts us well ahead of most other economies in the world at the moment.
Well, it's a question of whether a glass half full or half empty. Now, even though this is one particular year with close to 7% growth number, the very important factor is the next 3 or 4 quarters will be 4.5 to 5.5% kind of vicinity, rather than any other number. So looking ahead, we must take that into account as well. Also, what is very important, more fundamentally, not talking so much of statistics, but talking more about economics, what we need to keep in mind, the effects of higher interest rates and effects of high inflation and high commodity prices will possibly be hurting us a little more going ahead, at least in the next sprint, or possibly over the next sprint as well.
Right.
So that we have to take into account, which was not that damaging in the Q1 number which we have just seen today.
Okay, we'll come to those inflation numbers in a moment, because that is one concern, remains a concern going ahead. But Subhash Chandra Garg, former finance secretary, you've been rather critical, or at least you've been suggesting that there is no need for celebration, because you, and I quote a tweet that you have put out, where you've suggested that while we've grown 13.5% year on year, when you actually look at our 3-year growth, you're pointing that it's only 3.3%. Do we need serious introspection is what you argue, but there will be those who will counter and say, look, we had from 2020 2 years of COVID, and then we've had the Ukraine conflict. So given that, should we not see these numbers in a more positive light, Mr. Garg, or do you believe that the worst is not over?
See, we can always look at things positively, and we should look at it. That shouldn't be a problem. And the fact that we have come out of the pre-COVID level now, and we are 4%, 4.5% over the pre-COVID level. Right. So that is fine, but I think what we should be really worried is that are we growing or we are not growing? And in that, the GDP growth in 3 years is only 3.3%. You take
No,
either
but those are,
GDP or
those are
GDA.
3 years, I repeat, where we had 2 years of a pandemic and 1 year of the Ukraine war.
See, pandemic year, in the second wave, we did not sort of put lockdown, and therefore last year we grew in the quarter 1 by 20%. This year we are growing at 13.5%. It was the decision to lock down in the quarter 1 of 2021, which actually created the whole of the problem. That was not COVID. That was the decision taken to lock down. In other quarters, we did not lock down, and therefore we did not go down that deep into sort of negative growth. What we need to see actually seriously, Rajdeep, is that for last 3 years in the second half, which is not COVID affected that way,
Right.
we have been growing only at 4% consistently in last 3 years. The second half is only 4%.
You know, you're
This
making a very important point. You're saying the second half of the year, over the last couple of years, which were not technically affected by COVID-induced lockdowns, growth has been at 4%. But, you know, again, we need to also look at the global picture. But Siddharth Zarabi, you've heard two views in a way. Do you believe that the truth lies somewhere in between? We are still recovering from a low base. So some of these numbers can be deceptive at times. And therefore, we need to be a little cautious before we celebrate, given the fact, as Mr. Garg is pointing out, and Mr. Sanyal to some extent, that the next few quarters may not be as buoyant as what we saw, because this is in comparison to last year, which was the COVID-2 quarter of 2021.
Rajdeep, the current spate of economic growth could be described as the mid-phase of a marathon, where the runner had run out of steam. He caught up with some water and is now sprinting to catch up. And this catch-up is very significant, regardless of the base effect, as well as seasonal factors and extraordinary events like the Ukraine war that you alluded to. We are the fastest growing economy, and in the rest of the year, despite the sharp deceleration that we will witness, we will still be the fastest growing economy in the G20 nations. So those are the macro numbers. But if you look inside the numbers, the most important part I would like to submit here today is the robust performance of the services sector, because that is directly linked with organized as well as very large amount of unorganized workforce, which is services, trade, transport, hotels, and the telecommunication impetus that will come in. And therefore, I believe that we should for a moment pause and not do a quarter-on-quarter yearly comparison with extraordinary times. We are now in a spate where if the government continues to spend, and if private sector investment, which is the other big rosy bit of data in these numbers that I have noticed, if that continues, we are looking at a much better performance in the second half of the year and lower inflation, which is the best headline that we could talk about at this point of time.
And manufacturing, Siddharth, which remains tepid at the moment. You know, the expectation is that over time that will also pick up.
There was a lot of unmet demand that was met post the lockdown. It was but natural that such levels of demand could not have been sustained. And if I may add, in the current monsoon season, we have not seen equal regular rainfall. That has had its own impacts. We will see some impact on the rice paddy output this year. That is affecting consumer demand, and consumer demand is directly linked to manufacturing. Yet we can see in terms of new order activity, there has not been a major decline. And the government press release makes this very important point that you will see some revisions. They could be downwards or upwards. I argue that in certain sectors there will be upward revisions when these numbers are restated down the line in a few months from now.
You know, Mr. Sanyal, taking up from what Siddharth said, we spoke initially about inflation being one of the concerns going ahead, but there are good signs there as well. You know, we've already seen in July a slight decline in inflation numbers, and going ahead, given the steps the RBI has taken, that might have its own effect. Do you therefore believe, when you say that the next few quarters will still be a struggle, as Siddharth points out, it could well be a recovery where certain sectors move faster than others? You know, you'll have a W-shaped recovery more than a V-shaped recovery. Do you agree with that, that there will be sectors, or do you believe inflation remains a big concern?
Well, inflation at the moment remains a big concern, but I agree with you, Rajdeep, that there is hopefully over the course of the next couple of quarters, we see inflation numbers coming down to some extent, because at this moment there is a very significant slowing down on demand on certain segments. So we might see some bit of softening on these numbers. But just going back slightly on your particular question on vis-a-vis some of the other economies, how we are doing, I think the way I would be seeing it, and a best way of looking at it, is what is India's share in global GDP? Whether we are achieving our share in global GDP at the pre-pandemic level. That answer is still no. We are still lower than our own share in global GDP, what was in the pre-pandemic level, not by a huge margin, but still it's lower. So at this moment, as Dr. Garg clearly explained very nicely, that these 3 years overall growth momentum, I mean, it kind of we consolidated over these 3 years. If we put these 3 years together, going ahead, the big challenge will be on a relative basis, our share in global GDP has to grow higher and reach our pre-pandemic level, which is still not the case.
Dr. Garg, do you see any, are you willing to see the glass as half full? Because as I said, your first reaction to these numbers was that the glass was half empty.
See, I believe the inflation is actually a bigger worry. You saw the numbers today. The nominal growth is 26.7%. The real growth is 13.5%. This tells you that the inflation, underlying inflation, is 13.2%. Sometimes we are actually a little bit sedated by the consumer price number, inflation numbers, which don't represent the economy-wide inflation. The real inflation is this 13%. I entirely agree that with the global economy slowing down now, there would be much less pressure on exports. Exports will come down and domestic availability would increase, and that would bring the prices down in times to come. But that would hurt the growth as well. Our imports are not as flexible, where imports will go down substantially. And therefore, what I see, and this is also reflected in the RBI's projection for the second half, that there is a pain left for many times to come. In the second quarter, you will see a low growth of 4%. For an economy which is only at $3 trillion, 3% or little bit more of the global GDP, as was being said rightly, and with 16–17% of the population, even if we grow by 7 or 8%, to an economy like China, which is 5 times more than that, if it grows by 4%, they add 2 times or 2.5 times of GDP of India in a year.
So we are nowhere near our 5 trillion goal at the moment, and that in a sense suggests that the size of the economy is not growing as fast as you need to provide those kind of jobs, to provide the kind of momentum it needs. Siddharth Zarabi, is there a sense, you're talking to Finance Ministry officials, are they disappointed with these numbers? Are they, in a sense, is there cautious optimism? What is the mood in the Finance Ministry with these numbers?
I think very clearly optimism, because what the Mandarins are telling us that we are already growing faster than pre-pandemic. Now let's leave the semantics aside and let's focus on, Rajdeep, if you allow me, what will the impact of this number be? Because this number is behind us. We are already in the second quarter, and that will influence decision making in the remaining 6–7 months of the current financial year. The big takeaway is that if the RBI till some time ago was considering more aggressive rate hikes, I believe at the end of September, when the Monetary Policy Committee meets again, they will take comfort from inflation and the relatively robust economic data projection, which is, by the way, lower than what the RBI had said. And therefore, a 7 to 8% growth in this year, which started off with yet another black swan event of Ukraine and its consequences, will be significant. And the very last point, to the inflation rosy scenario, which I myself am talking about, I would give the flip side of the argument that the government has kept petrol and diesel prices administered and they have not moved for many months now. If that were to be passed on, then we will see the inflation dynamic changing, but I suspect that will not happen. So I would say it is better news than what we were expecting a year back.
Let's leave it there, because when it comes to the economy, we can always look at the glass as half full or half empty, and we can cherry pick the numbers that suit our narrative in a way. So before we either celebrate or indeed lament, I think the truth as always lies somewhere in between. Thank you all very much for joining us and giving us a perspective of what these numbers really mean. Cautious optimism perhaps is the best way to describe the mood at the moment.